Good morning and welcome to Stock Market Today for Wednesday, May 29th, 2019. I'm your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan Russo _CMT. I've been known to post some of my thoughts there. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens, as well as on Saturdays. U.S. equities were lower Tuesday, closing near the lows of the day. Treasuries rallied with a 10-year yield hitting 20-month lows. Dollar was stronger versus the euro, but lagged against the yen. We would expect the yen to be strong with the market under pressure. Gold finished down 50 basis points. WTI crude up about 1%. At the sector level, comm services was the only group to close higher on the day, while tech and discretionary also outperformed. Staples, Utes, and healthcare led to the downside despite the decline in equities. And as we get to the desk this morning, S&P futures are down 60 basis points after closing near the lows of the day yesterday. Asian markets were mostly weaker overnight. Japan was down over 1%, though China did post a modest gain. European markets are under pressure, down over 1% this morning. Treasuries are extending their recent rally, pushing the 10-year yield towards 2.2%. Folks, you've heard me talk about where I think yields are going for quite some time. Dollar is weaker versus the yen and stronger on the euro. Gold up 40 bips. WTI crude down over 2% here this morning. And what do we have for the S&P 500? We're going to call it pushing on a string. Futures are trading lower this morning, testing this zone right here between 2775 and 2800. That is support level. Resistance, we got to start thinking about this gap around 2850 as near-term resistance. Then obviously the 2900 to 2950 zone. Will the RSI break above 50? That's the key question, and we will keep asking it. Because once we get the answer, we will have our strategy. Right now, we're holding above support, but momentum appears to be shifting to bearish ranges. Should the S&P 500 break below key support and momentum stay bearish, that would provide a confirmation to the price action, and we want to adjust accordingly. At the same time, we'll be watching Chaikin money flow. It's bullish, but declining, and again, as I highlighted, we had a negative divergence at the May 1st high. Did not confirm at that high. So our indicators are starting to move towards bearishness as the market tests support. Broken support with momentum and money flow confirmation, that sends a pretty clear message to me. We're watching closely. Our market in a minute. What are we talking about in the note today? Chaikin Analytics clients. It's Wednesday. We do the midweek market update. As we said earlier, stocks closed near the lows of the day. QQQ was a big outperformer as the market was rallying and actually held up well as we went into this consolidation, but now they are on the verge of underperforming the SPY, and that's an important message. We're going to take a look at that a little bit later in the show. Small caps continue to lag the broader market. That's not a new message. That is a continuation. For those of you who are longtime listeners of this show, you've heard me for a while talk about avoiding small caps when you're looking at ideas in your portfolio, favor large over small. That continues to be the case, and we'll get into that a little bit later. Sentiment moves towards fear. We'll take a look at that. And futures, as I said, do point to a lower open here today. Power bar ratios are skewing negative, folks, across the board, actually, except for small caps. Now, remember, small caps went negative late last week, bounced back on Friday. Now they're even, but the Dow, 3 bullish or very bullish stocks for 4 bearish or very bearish stocks, down over 1% yesterday. S&P 500 down 90 bips, 91 bulls to 99 bears. Now, what happens is when stocks roll over, a lot of them move into this neutral zone. When we get these swift moves down, a lot of them move into neutral. So if we do get a stabilization, we would expect these to revert. However, if they continue to drift and the ratios become bigger to the bearish side, that's a message, folks, we'll adjust accordingly. NASDAQ actually outperformed yesterday, 18 bulls to 22 bears, though. And there's your small caps in line to slight outperformer. 393 bulls, 393 bears, all square there. Bonds, big rally, up 80 basis points in price, sends yields lower, and they are continuing to do so here this morning. According to the Chaikin Power Bar, large cap stocks have turned somewhat bearish. Major indexes are all bearish. Stock of the day today is Cypress Semiconductor, CY. Now remember, the stock of the day is auto-generated by our algorithm. It's based on the power gauge rating. We come here and conduct the analysis in real time, and we bring some context to what's going on. Cypress closes at 1540, down 45 basis points yesterday. Very bullish rating due to very strong earnings performance, very positive expert activity, attractive financial metrics, and strong price volume activity. 20 factors kick out a very bullish stock. Strong trend, strong industry group. Market and model are in agreement. Dynamic duo in gear. Stock is rounding out of an oversold position. Money flows bullish, and it's finding support at the rising long-term trend line. Now, semis have obviously come under pressure and continue to do so. I think you need to look at Cypress within the context of your risk parameters. If you're more risk averse, you can probably let this one pass or give the market some time to stabilize. If you're just looking for long ideas and you're a little bit more willing to take on risk, Cypress is the type of name you would look at buying. For me, I think you want to make sure it holds above. We're sitting right on the support zone, so I think you have to give it a pretty tight leash if you are going to take a shot here on the long side. For me, with the markets under pressure, I want to see a bit of a stabilization, especially before I get involved in a group like semiconductors. But, I realize that there are a lot of different styles out there. If you're more aggressive, take your shot. If you're more conservative, I think you let it play out. Sector tracker now, moving to the major sectors over the last 5 days. And this is where the action is, folks. The sectors tell the story of the market. Everybody likes to focus on where the S&P 500 is going. And yes, that is important. But the sectors tell the story. And you've heard me say it for over a week now, that the positioning at the top of this list is defensive in nature. Even with most of the groups down, it's still defensive. The outperformers are your defensive groups: real estate, utilities, healthcare, staples. All defensive. Middle of the road, fins, tech, materials. I don't like materials. Dollars rallying. Commodity levered names, I don't like them. Discretionary, likely to come under pressure. Margins are likely to start to come under pressure as the tariffs work their way through the system. Industrials, trade tensions, and energy. You know how I felt about that one. I have not liked it for a while. I've been advocating to avoid it. Hopefully, you all have been listening because it's been the right move. Our industry in focus today, telecom services. Over the past 6 months, this group has underperformed the S&P 500 by nearly 7%. And its power bar ratio, which measures future potential, is weak. It's got 8 bearish, or it has 8 bearish or very bearish stocks for 5 bullish or very bullish stocks. And that ranks it middle of the road, 10 of the 21 subsectors that we look at. And it's actually moved up 1 slot over the past week. But we look for leading stocks in leading industries. We don't look for stocks in lagging industries, unless we're looking for bearish ideas, in which case we might want to consider names like Boingo Wireless, Wi-Fi, Iridium Communications, IRDM, ORBC, all with very bearish Chaikin power gauge ratings. And let's take a look at one here today. Now, I will tell you Iridium and Orbicom are deeply oversold, but what's not deeply oversold is Boingo Wireless. Wi-Fi, the ticker symbol here, very bearish rating, weak trend. They've lumped it here in software, which is strong, but it's a communication software company, so we have to kind of slice and dice it a little bit. Clear downtrend below the declining long-term trend line. Been an underperformer since November, and the stock's been bearish pretty much since that time frame. Market and model are still in agreement here. Dynamic duo are still in gear, and we can actually see the intensity of underperformance picking up of late. Chaikin money flow bearish, stock is overbought below a declining long-term trend line. Again, there's a couple ways to slice and dice this one as well. If you're more aggressive, you put on your bearish trade. Maybe you look at the options market, look at a bearish put spread or outright puts. If you're a little bit more conservative, you likely wait for a break of a level and kind of pile on to the momentum trade there. But either way, depending on your style, Wi-Fi is certainly a name we don't want to own. And it is the type of name we want to consider for bearish positions that fit your style. If you're conservative, wait for a break. If you're a little bit more aggressive, you can put it on now. You have to know yourself. You have to know your style. You have to know what fits with how you invest and how you trade. Trending names now. Yesterday's S&P 500 movers and shakers are gainers and losers. Investors like what they saw from AMD's new chip, sent the stock up nearly 10%. Total System Services finally announced speculation on Friday that GPN would buy them. GPN is buying them. Stock deal valued at over $21 billion. Since TSYS, Total System Services, up 4.75%. Activision Blizzard caught an upgrade, up nearly 3%. Disca and Dish, a lot of moving parts in the media space yesterday. These two were to the good. 2.8% and 2.75% respectively. I will point out that Dish does have a bullish Chaikin power gauge rating. Loser side of the board, KHC. Sales data disappoints. Remember KHC? Remember when it blew up? This is why we don't catch falling knives, folks. This is why we let the power gauge dictate. Stock's been bearish ever since for the most part. We've never been inclined to catch the falling knife. I've never even looked at it. Continues to trade lower. Perigo, neutrally rated stock, and Mylan, neutrally rated stock, both down about 5.7%. Generic names were under pressure yesterday. Nectar, just a lot of volatility on both sides of the board for that one. Down 5% on the day. Philip Morris, MO, or Altria. Both stocks actually were down about 5% yesterday, 3 to 5% yesterday, as Nielsen reported that sales data and volume data for cigarettes disappointed, and ultimately that is a good thing. People seem to be buying less cigarettes. Now let's move on now. Let's get into the analysis. Q's on the verge of underperformance. Here's our Chaikin chart. Now, the fund does have a bullish Chaikin Power Gauge ETF rating, but we do everything in combinations, right? We don't just take the bullish rating and run with it. We have to look at it in the context of the market. Are they in agreement? Now, they had been for a while. Saw some nice outperformance. However, now we are on the verge of underperformance, actually ever so slightly dipping below that 0.5 level. And you can see it's been declining since making it top. For those of you who like to draw the trend lines, we do have a breakdown. Now, Chaikin money flow is bearish for the Qs, is bullish for the Qs rather, but it's been waning, right? You see this steady decline, similar to what we were looking at for the S&P 500. I would also point out the power bar ratio for the Qs is now skewed to the bearish side of the coin. 22 bearish or very bearish stocks for 18 bullish or very bullish stocks. This is your aggressive part of the market. Now it's starting to roll over. Obviously, a lot of technology names in here, and they're getting hung up in the trade tensions, but it's just something to keep an eye on. We're on the verge of underperformance. Folks, we're getting to the point. Now, for those of you who read my market survival guide, my weekly note, that's actually coming out today. Normally comes out on Tuesday, but we're publishing it today because of the holiday on Monday. We go through a lot of this stuff and strategy and how to be positioned. And these are the types of data points that drive our analysis. And for 2 weeks now, we've been advocating for caution, and you've caught it here as well. We've been highlighting the fact that defensive groups are outperforming. And now support is being tested once again this morning. Small caps continue to lag. You've seen this chart. You should know it. By now, you should be seeing this chart in your sleep. This and the relative chart of the semis. But they speak to risk on, risk off. They speak to sentiment, and we watch them closely. Why? Because IWM relative to the SPY is below the declining 200-day moving average and is now broken below support. In a move that was confirmed by momentum, as the RSI of this ratio is in bearish ranges and remains there. At the same time, on an absolute basis, the fund has met resistance and rolled over. Folks, for a while now, we've been talking about large over small. That continues to be the case. I don't see anything really changing that in the near term. But when you're thinking about how you put together your portfolio, this is how I want you to think. Right? You can see it clearly in these relative charts that you want to be favoring large caps over small caps. Energy remains bearish, and we want to continue to avoid it. XLE relative to the SPY, again, clear downtrend below the 200-day moving average, broken below support, tried to bounce, failed. Momentum solidly in bearish ranges, and we can see here rolling over on an absolute basis. I don't see any reason to go bottom fishing in XLE. And remember, oil rallied, but we stayed bearish energy. Why? Because of the Chaikin power gauge. Energy was persistently the lowest group. And we looked at these power bars, and look, it's still 11 bearish stocks, 0 bullish stocks. I don't see a reason to get involved in energy on the long side of the portfolio. Sentiment does move towards fear. Something we are watching. 13-period moving average of the CBOE put-call ratio now knocking on the door of that 1.1 level that usually marks or could mark near-term lows in the market. But I think the way you want to play it is look for a push through. And then as it begins to roll over, that would be your indication that we could be getting a near-term bottom in the market. But I did want to point it out today. And if you're interested, I referenced our survival guide. Head over to chaikinanalytics.com/survival-guide. Big picture view of the market. We look at strategic positioning. We look across asset classes. It's definitely worth a read. I will see you back here tomorrow.